Okay, welcome to our webinar. It's a very, very intense webinar today because I only got about 40, 45 minutes to spend with you. I'm just, packed to the gills today. But I wanted to go through a couple of things, and today's about a perfect day to talk about day trading because it's the most annoying day trading day ever, So anyways, I want to just show you my chart. Let's see if I just want to make sure that the video is working. Come on over here. Okay. All right. Everybody sees the Eurodollar chart, right? Everybody's good to see on the. I just want to make sure somebody give me a confirmation you guys are seeing the Eurodollar chart here. Yes. 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 Okay. Okay. All right. All right. Excellent. Those of you who follow me before, those of you who follow me on Twitter, those of you who've been in my other webinars know the flow set up pretty well. Those of you who are new, I'm going to share it with you very quickly. The flow setup basically takes place during the 4 a.m. to 12 noon New York time, which is whatever translate over to your GMT time, but it's basically during the European Open to the European close, when Europe and New York intersect, when London and New York intersect, the highest liquidity times, and we trade primarily, we trade the Eurodollar in that time. It's the most liquid instrument, and we try to go with the momentum move. The idea basically is that if the pair has moved 50 points in one direction from the 00 level, we're going to join that move and hope that we can move it towards the other 50 levels. So in this particular case, I'm just going to show you if the Eurodollar went through 34.50, right, into Europe, right, pretty much off the 3,400 out of Asia, had a lot of power. We got long here. We got stopped out on a very, very annoying news clip about the fact that the Irish are going to vote for this the European bailout thing. And basically, as anybody of you who just followed me on Twitter knows, I think that this is a non-event. The Irish are going to vote for it. What are they going to do? Get out of the euro right now? It's going to be a disaster for them if they do. So I think they're going to have a referendum. The referendum is probably going to pass. Although of course Ireland was the one that rejected the original EU treaty. That's why a lot of people were a little bit worried. So anyways, bottom line is it's created a massive amount of instantaneous sovereign debt angst that pulled us down, stopped out to 3,400 on the stops, and bounced right back up. Right. So that's just day trading. Sometimes you trade the market. Sometimes the market trades you. Today was clearly a day where the market traded you. But the general setup is a move from the 50 to the 00, and you can see how many times it's worked very well. Last week it was basically, I think, 3 for 3. You see how strong the moves are over here. If you guys want me to just kind of mark it for you, I'll mark it for you over here. Here was one setup that made money. Here's another setup that made money. The way we trade it, by the way, in BK is we actually don't go all the way to the 00. We go to the 33 points forward, so 83 on the upside or 17 to the downside. Because we obviously see that there's usually a lot of optionality. There's a lot of barrier protection at the 00. Sometimes it's not going to make it all the way up there. So anyways, that's the classic flow setup, right? So what I wanted to show you was this other setup that I showed at the New York Traders Expo, and then I wanted to show you kind of a twist on both things. And then I'll show you my real trades today, so we can all discuss what kind of a cluster disaster it was today, and how I was able to kind of survive it a little bit, at least for the time being. All right, so that's the flow setup. Anybody have any questions on understanding how the flow works in its broad outline? I'm not going to get into the details of it because there's so much information of it on the web. If you want to go to our YouTube channel, if you want to go to bkforexadvisors.com, I'll put up the links. There's 1,000 different videos that describe the setup. Right, I do flow the Aussie dollar as well. The Aussie dollar I try to flow pretty much through the round numbers. In other words, I wanted to go through the round number and then I'm going to join the flow instead of the 52 to round number. But Aussie is not as effective as the euro. Aussie will fake you out a few times. Although I'll show you my Aussie trades today. You'll see me taking some trades as well. Aussie is the problem with the Aussie is that it also is very liquid in Asia. So you really, from Aussie, I would say you probably should expand the time frame from, let's say, 7 p.m. New York time to probably, 12 noon New York time, because you really want to trade through Asia, since Aussie is the liquidity center as well. It's just much more difficult trade to make. That's why I'm not as intense about my trading the Aussie as I am everything else. By the way, this is an hourly chart. This doesn't matter. Everybody's asking me, what time frame I trade this on. I don't trade on any time frame. It's between the time frames. And the trade sometimes can last an hour. Sometimes the trade can last 2 hours. Last week, I was gone. Kathy had a trade that literally lasted, I believe, like 2 days before it finally hit. I don't know where it was. What was the trade? There was a trade there where she was just holding it forever. I think maybe this was it. Like where she was literally holding it. She was holding it from here all the way until it finally hit over here. Or I think no. What the hell was it? I don't know where it was. Whatever. She was really, it just took a long time for this trade to develop. Sometimes my point being is that the trade is not candle dependent, but I usually like to use hourly candles just because hourlies give me a good time frame to operate on. I think that's a reasonable time frame on a daily chart to operate on. So I want to show the reason why I bring the hourlies too is because the hourlies are also, I'm going to change symbols for you here because this is a trade that works best on this particular symbol. The hourlies, there's also another trade pattern that I like to trade, and this is the exact opposite of momentum. This is basically the momentum exhaustion setup. And one of the interesting things that I think you guys can learn here, hopefully it will help you, is when you're trading, there's basically only two types of trading you can make. You can either make momentum trading or anti-momentum trading, basically trend or turn, right? There's only two states that the price can stay in. So in a perfect world, what you really want to do is set up a situation where you have one setup that is momentum-based and one setup that is turn-based, and hopefully, as the market environment changes, you're able to catch the moves, the momentum moves in one setup and the turn moves in the other setup. And the fusion of the two setups inevitably, hopefully, provides you with a more dampened volatility on your equity curve. In other words, with a little bit, perhaps maybe a little bit less tippage overall, but your drawdowns would be substantially lower because you're able to take advantage of the changing states of the market. So anyways, the turn trade, the anti-momentum trade that I like to trade, very simple. If you notice, all my trades are very, very simple. I don't believe in cluttering up the chart or cluttering up your ideas. I'm using RSI. RSI is as old an indicator as there ever has been, from 1970s. Wells Wilder, great indicator. Its primary function is to basically tell you, we're using a 14 period, which is the default period, by the way. Everybody can see this, right? Everybody sees my little pop-up window here, sees the default period, right? I just want to make sure. Is that right? Okay, super. So RSI basically says, does a mathematical calculation, and it says, hey, if the price is above 70 or below 30, that means 90% of the price action prior to this period has been below this or above this. In other words, you're at extreme points, right? You're at extreme points. So this is the underlying idea of RSI, is that RSI just tells you oversold and overbought conditions. That's all it does. This, by the way, is, I think, a very, very big mistake. Every rookie trader says, ooh, RSI above 70, I'm going to be a seller. Ooh, RSI below 30, I'm going to be a buyer. Stupidest trade ever. Because remember, if it's below 30, you can go to 20, you can go to 15, you can go to 8, you can go to 8, you can go to 85. Just because it's oversold doesn't mean that this is a sell, or just because it's overbought doesn't mean it's a sell, just because it's oversold doesn't mean it's a buy, right? All it is just a temperature. It's a temperature of the market. It tells you have a lot of fever or you're super cold, however you want to view it, right? The way I trade this setup is a little differently. I let the market, or the indicator in this case, tell me when the turn is most likely. That is, what I'm looking for is for the fever to break, right? To use the medical analogy. So here we are super, 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 super hot, right? And my idea is only when on the hourly candle the RSI drops below 70 am I going to get short the underlying? Or only when the RSI, after dipping below 30, it pops back up above 30, am I going to get long the underlying, right? So let's just take a look. This is the pound, because I like trading the pound. It's the most, to me, it's the most productive pair for this particular setup, because pound does a lot of up and back, lots of, choppiness back and forth. If you look at the chart, you actually see that this is the setup. Obviously, one of the interesting things is this is the setup that works best on a chart that looks like this. If the chart looks like it's a range, you basically have the perfect setup for this kind of a setup. So here's the first chart. Let's go. I'm going to pop up the window so you guys can actually see this very, very closely on the charts. So here we go. Wait, where am I? Hold on. Show me display data. All right. Everybody sees the display data. I'm actually going to make this. No, I can't make it any bigger. Okay. All right. So here we are. This candle. RSI, where am I? This is all oversold, right? I'm in the oversold territory. Candle is 76. Candle is 73. Candles is all above 70, right? We're all above 70, blah, 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 blah. What's this candle? This candle dips. No, this candle is still above 70. This candle right here, right? Dips just below 70. Okay? So, okay, this is my signal to get short. I'm going to get short the underlying, and I'm going to choose the first example as the sucky example, because I just want you to understand that this is precisely what you want a good setup to do. It's never going to work perfectly. So I get short here. Now there's basically two types of resolutions to this type of setup. Either it's a true turn, or it's just a pause in momentum while it works off the overbought or oversold condition, and then you may have one more burst higher. So in this particular case, it actually is just a pause in momentum. I get short here. This is hourly candles. And my stop is always 50 points. The other thing that I think a lot of rookie traders do as a mistake is they use the swing highs, swing lows as a stop. Swing highs and swing lows have only one function in FX or in any other instrument. They're there to take away your stops. They're, the reason why market makers love to run those things, because they know every idiot out there puts the stop right underneath here, right? And the easiest thing to do in the world is just to take out that stop. Now, in this particular case, you actually would have saved yourself tippage, but that's because you were just blatantly wrong. But trust me, 99% of the time, if you put your stop over here, all you're going to do is get tripped on a stop instead of actually having a valid, productive setup. So anyways, my stop is 50 points from entry. Let's just put the stop at 58.50. I get tagged out here, obviously. Big power move. I think there was a news event here, whatever. Just took me out as a final burst of upward momentum. Right? Okay, so fine. So I'm minus 50 on this one. Now we're at 75. The next trade is 63, right? Sends me yet another, a sell-off signal. So now I'm going to get short again. And this is very important. You don't really want to, the other thing is, you don't want to try to second guess what a turn is going to be. You just want to trust the market that this is showing you a weakening of momentum. I get short again. I get short again over here. Jose is asking me on your chart, do I see what a large banks want to buy or sell or just follow them? I don't think anybody can see what large banks want to buy or sell and just follow them, because every bank holds that information securely on their own desk. It's proprietary information. I don't think it's really important. Even if one bank wants to be a buyer, there could be another bank that's a seller. For example, every single day in the Eurodollar, we have the following little drama. The Arabs come in and buy the euro early in the morning in London, and the Russians come in and sell the crap out of it, sometime in the middle morning, right? So what does it matter? They're both big players. They both have reasons to want to buy or sell it. I don't think it's, this is precisely the point that I think I kind of want to make to you guys. As retail traders, you have absolutely no informational edge. You simply will never ever know where the big orders lie, or how you want to, dovetail those orders, or how you want to second it. And typically, if you try to extract that information is going to be late and wrong. The market counts on you thinking that you're smarter than the market, thinking that you know where the orders are, and making a lot of stupid mistakes. So the first and foremost thing as retail traders you need to do is forget where the big guys are, forget what they want to do. It doesn't matter. For every one big guy on one side, there's a big guy on the other side. What's important is where the cumulative market goes. What's important is what the price of the action of the market is telling you. What's important is what the tone as far as the underlying news is telling you. What's really important is your own eyes and your own brain, okay? not what somebody else is whispering in your ear. Anyways, short here, boom. My risk reward ratio on this is minus 50 plus 33. I make my 33s just like on my flow, and it makes a very nice setup. Here's another one on the short side. Let me just go through one more example. So, where am I? Here's RSI 27, right? This RSI is 30, right? I'm a buyer here. This is another perfect example where I get tagged out on the pound again. So I'm going to mark this as a negative, right? I get tagged out on this particular pound. I get long here with a stop at 56.50. I get tagged out. Happens. But here we go. RSI is 25. Here in this particular case is 27. Here it's 30. I get long here, and I have very little slippage, and I make a very beautiful turn. Now, those of you, by the way, that have more patience or want to trade this in a longer term, more swing-like manner, one of the cool things is that sometimes you can actually pick the bottom. I mean, probably 1 out of 4 or 5 times, this setup will give you a long-term bottom, right? So if you want to hold half the position, take half the position at, let's say, plus 30, then hold everything at break even, and then just maybe hold on for the rest for 100 points, or maybe 150 points, in which in this particular case is like a 2-day trade. You certainly are welcome to do that, and maybe 1 out of 4 times you can catch that long setup. I'm just a single entry, single exit trader, so I don't try and do it. But yeah, you could do it. Here's another example. We're in the 85. Next one is 82. Next one is 76. Next one is 73. Next one is 68. We get short here. Look at this. Look how patient I am. I actually have to wait all the way out here, 4 candles before the momentum really brought itself. But look, didn't matter because I had very little slippage against me on this side. Maximum adverse excursion was very little, and it eventually trickled down all the way down to like plus minus 40. I'll actually show these trades live to you because I did a lot of these trades live, and you can see the turns on this thing. Okay, so that's the RSI momentum. Let's take 2 seconds. Let me see if I can pull up my miserable. This is everybody's familiar with my test account, right? That I always abuse. Oops, sorry. Let me make sure you guys can actually see this. Hold on. Can you guys see this particular? Can you see the? No, you can't. It seems to be going away. Okay. Well, let me see. I'm going to minimize this. I think I have an idea of how I can do this. Okay, just bear with me. Hey, bear with me. Let me see if I can just do this correctly. All right, you guys see this little Orlando account? Okay, now it should be. Guys, is everybody just Blakey? You see it? Okay, you see my Orlando account, which gets destroyed all the time. Okay, let's ignore what happened today because I want to get back to this a little bit later. But let's just take a look. This is a pound $1 1-hour chart, right? And show you a couple of. Where's my RSI examples? This is when I was on vacation, unfortunately. Okay, so this is the pound with a couple of RSI examples. In this particular case, you can actually see this chart. It just actually shows you that you're below 30. So here's a trade. Boom, boom. Winner. Another very slight dip below 30. Boom, boom. Another winner, right? This is me being on vacation, so not being able to trade the trade. This is me buying early. This is just me screwing around, buying a little bit too early. I shouldn't have bought this because this was not below 30. I should have been patient. I should have bought over here. So I actually doubled down. I bought here, and then eventually both trades popped out over here. Here is me selling off the 80. Okay, so this was a very, very big power move yesterday, right? I had to wait 3 or 4 candles before we finally worked off the momentum. I got short here. By the way, just want you. No, this is not a demo account. This is a real account. This is real money. This is real money. No, dude. If it was a demo account, it'd be $500,000. This is real money. I demo account. This is my account that I just experimented. It's my experimental account. My real account has a little more money than $5,000 in it, my friend. Anyways, yeah. That's what it is. The live platform, exactly. And by the way, the only reason I use this broker is because this is the only place where you guys can actually see physically my trades, right? So this is why I like to show it, because you can actually see where I entered and where I exited. So it's very good for educational purposes. Also, I can't really BS you, right? So you get to see all my ugly trades as well, right? I can't pretend like I don't have any losers, right? So anyways, so this was yesterday, nice short, boom, boom, boom. We took a short. But what I want to show you is, by the way, on this RSI is, look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is 12 hourly candles, right? 12 hourly candles. So that's like I had to wait a whole day to let this happen. And this is the key thing. This takes a lot of time. You got to have a lot of patience, and you got to let the thing trade itself out. Okay. All right. I don't want to get to today's trade just yet because that is a subject for the end of this conversation. But I think again, you guys will find it interesting. But let's just take a look at the variations on the theme, right? Okay. So variation on the theme, dollar yen, right? We're going to marry the two concepts together. And I kind of like this a lot. And indulge me on this. Just indulge me on this because remember, this is me being on vacation, so I'm kind of putzing around a little bit. Not everything is perfect, but I think it's it just goes to show you that that you want, that in real life, obviously, you're not going to get the perfect execution. So this is a RSI drops through 70 on the dollar yen, which is another very good pair, in my opinion, to trade this particular setup, right? I should have entered over here, but I think I was out with the kids. It was like, I think it was like evening. I wasn't around the screens, right? Whatever. I realized that the RSI is triggered, right? The setup is triggered, but the limit has not really triggered because the yen is pretty much been flat the whole time. So I decided, okay, I'm going to take a gamble on this. I'm going to get short essentially at the same prices as I would have at this particular setup, right? And here's the thing. I'm targeting, this is the beautiful thing. If the RSI gets oversold and you get a trigger and you're close to the 00 level, right? Remember, markets are always going to go towards the 00 level, very test the stops there. Then you set that as your target. So in this particular case, I set the 80 level as my target, right? And it worked like a charm. And this is the kind of a cool thing where you can use the turn, the premises of the turn trade along with the underlying structural foundation of the 00 trade to kind of combine the beast into kind of a Frankensteinian monster, right? So here, this is Sunday night. Yen squeezes really, really high. RSI goes nuts, and then of course we have 3 consecutive down candles in the hourlies as momentum gets really worked up, and I get short here, right? And again, I get short like in the 20s, 21, 22, targeting the 80, 81, because I know that's actually this setup actually I should have held for much longer. For the same idea that you had the RSI, the momentum turn, and the 00 in front of it gives you tremendous amount of confidence that you're going to get those numbers run. So you can get in front of that trade and combine kind of the two ideas together, right? So you guys get that? That's sort of like, I think, the really cool twist on the whole idea. You're taking the momentum targets of the 00 targets of the momentum, and you're combining them with the turn targets of the RSI. Doesn't happen a lot, but when you get that, that happens, it's kind of a very cool setup, and I think it has a lot of high probability. All right, so let's just discuss the miserable day that is today, right? In the euro dollar, and I just want to show you what happened today, right? So here was the 34.50, the flow trade. We get long this freaking thing, right? It actually goes to like in the 60s. It really tortures me a little bit all the way through the Europe. It looks really good. Then the Irish come in. No, this setup works on the 1 hour time frame. I use the 1 hour time frame, right? So anyways, the Irish, the Irish news hits the wire. We get this ridiculous blip right down to the 34s. It gets me taken out, right? Now here's the thing that I think you might find interesting. This isn't any kind of a setup. This is just, again, this is my experimental account. So that's why I wanted to kind of show you. What I see is that the candle on the hourly wicks out big time, right? That means they tested 34s, they brought it right back up. What that's telling you is that the market really doesn't believe that this particular piece of news is that bad. And it's a relatively low risk trade to come back and join the risk trade, to come back and try to trade the risk trade, to the upside. So I actually Don't even wait till the 50s break. I actually join it over here. Once the candle closes and it shows to me a big wick and the RSI actually pointed back up above the 50, showing me the momentum goes back up, right? I got long and I captured some of this slippage back, right? Same kind of a thing here. What I get tagged down on pounds. Oh, this is a freaking miserable thing, right? On the pound, I'm kind of, I'm fooling around with the flow on the pound again. Pound looks good. We had good fundamental data early in the morning. Pound looks relatively strong. It comes back up. I get long the flow at 58.50, right? And it looks very, very good. And I get tagged out on the stupid Irish news. The pound comes back as well. Similar kind of a footprint, similar kind of a situation where the risk gets completely bought after the initial sell-off. I join the pound. I get that one back as well. So, sometimes the key thing in trading is don't get mad, get even. Well, I can't say I don't get mad, but I do try to say I get even. I do try to get even. I think, the worst part is to get mad and not get even. The best part is not to get mad and to get even. I'm like halfway. I get mad, but I do get even. Then the other trade day, I'm still in this trade, I was actually just, somebody was asking about the Aussie. Okay, so here's a perfect example where I double-crossed myself, and I kind of wanted to show this to you because you do this as traders all the friggin' time, right? So Aussie signals an RSI break, right? We had a big move up, big power move, then Aussie breaks down, and I get short, right? And now remember, this is 12 hours forward, so 1, 2, 3, 4, 5, 12, right? We get into the early European session, and I'm like, you know what? Risk looks really good. I don't want to hold this setup. Because I think the risk looks positive, and I'm pretty much right actually for the first 3 or 4 hours of the day. I covered right at the right time, basically flat, got myself flat. But this is a good example where sometimes you really want to trust your setup. Had I just done nothing, had I just not covered my trade and stayed in it, I actually would have made money on this thing. I would have made money on this stupid Irish, blip further, as the RSI gave me the initial momentum to the downside. And even now, by the way, honestly, as we're looking at this thing, right? I mean, it looks okay, but not great. You're looking at RSI here. It's not really, the temperature of the patient is kind of middle. It's not really strong. You really want this candle over here I'm long this thing, but I'm not loving it because frankly, what you want is you want this candle to start getting green. You want some more power because if you really believe that the risk trade should end strong today, we need to move in close to the 108 on the Aussie, which is the most, risk sensitive trade that we have in the market. So anyways, I mean, the key thing here is you win some, you lose some, you keep on punching. At the end of the day, you're hopefully more positive than you are negative. If you stay very disciplined and if you stay very focused on these setups, then you really have a very, very good probability of staying positive as you go forward. That's the key thing. But I love to show my real account because, especially my play account, because obviously you never stay as disciplined as you want to be when you're doing it. But nevertheless, it's still up. Works for all sessions. This is particular. No, I mean I primarily trade just the London to New York session. I really don't trade Asia. I'm sorry. I really don't trade Asia for the flows, but for the RSI, the momentum break, yes, the momentum is a 24-hour setup. The RSI turn is a 24-hour day setup. It triggers when it triggers. You take it when you take, when it gives you a signal, and sometimes it works quickly, sometimes it works really, really for a long time. Sometimes it takes you out, it does all those things. But what I wanted to show you today, what I thought was cool, was the fusion, going back to the yen, of the RSI with the OO level. So I'm actually going to mark the OO level for you so you guys can see it. So you can see it, it's the 81 level, right? And you can see that this is the 80 level. And you see how it triggers off of it and goes right into those levels, right? Okay, well that was very intense. I gave you lots of intense information. Does anybody have any? Let's do some Q&A for about 10 minutes, and then I'm gonna bounce, as my kids say. Anybody have any questions? Good. Nobody has any questions. Nobody wants to ask me where the euro's going. Yeah, I'm keeping the stops. I keep the stops 50 on all of them. The reason why I keep the stop at 50, by the way, guys, is because 50 is about half the average daily range, right? And I think I will say this, by the way. the one exception to the 50 stop that I'm kind of fooling around with right now, and everything I tell you, I don't trade the franc. I don't trade the franc. These setups I only trade on the Aussie pound and cable. Aussie cable and euro and maybe yen. That's all you want to trade this on. This is not a situation that you can trade on more choppier things. Yeah. Short euro at 159. You mean pound 159? I don't trade the ZAR, my friend. I don't trade anything that is, the pound is not overbought. The pound is not even close to the 70s yet. So the pound hasn't even, signaled that it's, that it's going. Right? Andy, the euro is going up or down unless it stays the same. I don't use trailing stops. I kind of want to, the other thing that I sort of want to show you with the kind of setups that I do is I believe that you trick. I'm stumbling over my own words because I'm trying to express it in the best way possible. I day trade the way professional gamblers play poker, one hand at a time, right? So for me, a trade is a hand, and it has fixed odds. It has fixed stop odds and fixed limit odds. And I just try to trade with a 65% or better accuracy rating. So, for the RSIs, somebody had backed us the pound for me. They told me that the accuracy was 67% this year, which is probably true, for the yen, I think the accuracy is probably in the 60s or 70s. Right now, the flow is trading at like 70% accuracy, The profit we take at plus 33 on the position. Well, BP, the 65 point stop, 45 limit. The problem is this: you can't get too greedy, and you don't want to get too wide on your stops. It may work for the pound, but I just think that 30, basically a third. If you think that a penny is the average that things move, right? And the yen is the exception to this rule. With the yen, I was going to say that I actually try to go for a quarter. For the yen, I go plus 25, and I actually stop myself out at minus 40 because the yen moves 80 cents a day. The euro moves about 100 cents a day. The pound can move between 100 and 120 cents a day. So I kind of bunch them together that way. The Aussie moves between 90 to 100 cents a day. So I'm giving myself half a day's worth of room for a stop and about a third of the day's worth of a trade. Yeah, we're trading negative risk return. That means you gotta win 2 out of 3 times to win. That's right. These are high probability setups, not high return setups. These are low return, high probability setups. That's what I trade. I try to play percentages. That's really where the where the numbers are. Those of you who all right, we're going to spend 1 minute in. I'm going to spend 1 minute on the BK website. You guys see the BK website? Okay, hold on. Okay, you guys see the BK website? Okay. By the way, I usually do like 1 flow, sometimes 2 flow trades a day. And on the RSI, it's actually 1 out of every two days per currency pair. But if you're doing more than 1 currency pair, you wind up with 1 or 2, you're carrying 1 or 2 trades a day. I find that if you're doing more than 2 or 3 trades a day on a day trading basis, you probably are at risk of being too over leveraged and losing money. Between 1, you want to do no more than 3, and generally 1. Between 1 and 3 trades a day is the sweet spot of a retail day trader. I think in terms of how you can realistically trade the market. And this is from a guy who used to do 25 to 30 trades a day. So nobody loves to trade more than I do, but it doesn't make any sense. You wind up basically ultimately losing money, you're dripping pennies when you do a lot of turnover. So if you look at our trade results, you see that the flow has actually been almost like 70% accurate, since we started. It's been really hot. Except for the miserable Irish today, who killed me. But, it is what it is. So anyways, any more? Let's see if we have any more questions. We got like about I got like 5 minutes here. Buddy is asking an interesting question. If the euro price at 3 a.m. is 34.58, is it set up short 34.50, long 35.50? No, not necessarily, buddy. What you want to do is, first of all, you want to look at the underlying flow, right? Like that is, what was Asia doing? If in Asia the euro was 3,400, right? And it's 34.58. What I'm going to do is I'm going to let it, and it drops back down to below the 50s. Today is actually a perfect example of this. Let's go back to the charts. By the way, you guys can sign up. Those of you who want to see my video with Rob Booker, you can see it right here. It's posted right on the website. You can sign up for all of our services right here. Just go to BK. The whole, half the site is public, and hopefully you guys will like it. No, I can't. I'm not going to talk. I'll talk about swing trading next time because I just don't have any time. But somebody was asking about this. Hang on. I'm just going to change charts. Just bear with me. All right. Just bear with me. Hang on. Okay. So, okay. You guys see the euro, see the pound chart again? Okay. Let's go back to the euro today, right? And let me just actually, I'm gonna go to a tinier time frame. Let's just go to like 10 minutes for 2 days, because somebody was asking me, how did I trade the euro? What was the move? So okay, so we're in Asia, right? Starting in Asia, we're at 34. We have a nice big power move all the way to the 51. Early in Asia, we come back down, right? We come back up. Now this is 4 o'clock. It's kind of when we start looking at the trade, right? So this is 340. Now, just before 4 o'clock, it actually breaks the 34.50. I don't take it because it's just before 4 o'clock. Then it comes back down to the 30s. And this is where I would get interested. In other words, if it comes back down but then comes back up, has enough power to come back up, then I want to join this trade. I want to be a buyer at 34.50. I always want to be buying into momentum. So it's not just like, it's 1 pip away from 50 at 4 o'clock. I want to move, I want to move on the trade. No, I really want to see the trade. The trade move up to that level or move down to that level from a large point of view. Ideally from a 50-point move to the downside. And that's when I want to join this level. In this particular case, obviously the Irish screwed us, but we'll see if maybe this will work later on. Maybe the risk trade will continue into Europe. Into Asia, and maybe we'll take out the 3,500. We'll see how well that trades now. But that's generally the setup. So it is a little bit of an art, as much as it is a science. But yeah, that's kind of how I trade. I always want to be trading into momentum on the move, on the flow move. I don't trade the crosses on any of this stuff. I'm sure it probably works well. Oh, look at this. El Mino 85. I'm going to read this. First timer, you make more sense than anyone I have heard. Thank you. Okay. You've just earned yourself a testimonial on our website. Thank you very much. And the check is in the mail, my friend. Thank you. No, I appreciate it again. The website is jforexadvisors.com. I'm actually going to post this on the link here so you guys can all hit it. Oh, well, can I do it? Oh. BK exhaustion.com. Sorry for the bulky name. So you guys can hit the website. You can look at my videos there. You can look at all the other stuff that we have. Excuse me. Okay, let's just maybe top last 2 or 3 questions. Anybody have any questions for me? Why is somebody asking this? Is it true that you cannot tell what institutional big orders are on the charts? Is it like a robot asking this question, or is it like a real human being? This is the 3rd time this idiotic question came up. The answer is yes, it's true. Yeah, tomorrow LTRO. Yeah. LTRO is the big story tomorrow, and we're obviously going to be looking at that. And it's actually interesting because I honestly don't know how the market is going to react. the range is really wide between 200 million and 1 trillion. So I don't know, if they take up 1 trillion, I would imagine that's got to be very positive because you would think that's a big liquidity injection and therefore would be positive for financial assets. But I have no idea. It's kind of weird. Maybe tomorrow, before the LTRO, I'll put up a note. We'll try to figure out how the market is kind of reading whether it's going to be positive or negative on the thing. Oh, they're asking because the previous webinar was on supply-demand levels created by institutions, supposedly. Okay, and you know this how? Because the institution personally told you this? I do not trade anything other than Forex. I am not smart enough. I let my girlfriend trade my stocks, and she does a much better job than I do. But she happens to be a professional hedge fund manager, so So that's my advice to you. If you want to really succeed in the markets, get yourself a hedge fund girlfriend. No, astrology is not related to Forex. But I am a Gemini. The stops, as I talked to you guys about, is usually half a day's worth of price action. So in the euro, it's about 100 pennies. So my stops are 50 pennies. Basically, I leave my stops at 50 pennies. BP Forex here said that in the pound it should be 65 pennies. That may be, better stop. I don't let the perfect be the enemy of the good, right? So generally that's where I stay for the yen because the yen has a lower range. It has about an 75 to 85 penny range. I'll put a stop at around 40 points, 40 pennies. But that's about it. I think, clearly, like today is a good example of sometimes the stop really screws you. Here's a good example of a stop totally screwing you, right? But more often than not, and this is the key thing, guys, remember, I am playing poker. I am playing hands with the market, right? I couldn't care less if this was a bad hand. Everybody knows what a bad beat is? A bad beat is just a poker term for when you're playing correctly, but you get a whole bunch of bad cards. This was just an example of a bad beat. It happens all the time. We can't control the cards. We can't control the headline risk. We can't control everything. As a matter of fact, I'm going to finish this up by giving you away the headline for my weekly, yes. Oh, thank you, but you're setting me up. The headline for my weekly, column that I write, right? And the headline for my weekly column is this. It's very important to understand that what we're doing every day is gambling. And at the same time, it's extremely important to understand that we can never become a gambler, right? We gamble for a living, but we must avoid, like the plague, the curse of becoming a gambler. And I'll explain that in much more detail in my column this week, which with some very interesting latest psychological data about, by the way, guys from Wall Street. But yes, and Marty, go ahead. Yes, you can pump my column. I write the weekly column every single week for FX Street, and you're welcome to read all of it. And by the way, all of you who have not joined me on Twitter, it's at fxflow.com. But anybody in this room who's not following me is really not getting half the value out of the market as they should be, because not only does my Twitter feed have the best market feed because you can just follow all of my list of the key market participants, but we give away a ton of stuff on that Twitter feed, including all of my prior columns, all of the various setups that we kind of do. So just follow me, and you'll be happy to get some really good quality information on the feed. Thank you very much, Marty. Thank you, everybody, for attending. She's cutting me off because she knows I got to go. The column is over here, BK Forex Advisors. I'm nominated in the Best Educated category. That's right. So if you guys feel like it, please vote for me. I would really appreciate it. It would be a lot of fun. And I thank you very much for coming, guys. We had a great time. Next time, we'll talk a little bit about swing trading and some longer-term trades. And in the meantime, do some of these trades. Let's come back and we'll discuss how those trades are working out for you as well as for me a month from now. Okay? We'll talk to you later. Have a great day. Bye bye.